Okay, this video is just about how to manage long-term entries and exits with, very limited chart knowledge and market experience. This is one way to look at the market and try to manage something for the long term, whether you got a few shares, you have a 401k, something like that. Um, Remember, there are many, many different types of investing, from dividend investing, auto reinvestments, um, all kinds of things are out there. This video is strictly trying to demonstrate with to show you how, with very limited knowledge and very limited tools, you can make some pretty decent decisions for a long-term style investing. So the disclaimer here is this is not any recommendations to buy or sell. You are responsible for your own decisions. End of story. So the goal here is that you only really need to check that chart once a week, typically on Fridays after the market close or any time in the weekend. And then Monday morning, you make your decision what you do. Then you will only need to understand that it's natural for prices to move up and down. If you look at this chart, you see it goes up and down and in the long term, and you can see lots of little gyrations in the short term. It's always going up and down. The goal is to try to figure out where these points, where these stars are, and take most advantage of those. You'll only need to watch the price and use a simple trend line. So we're going to look at just the price action and a trend line. Those are the only two tools we're going to use to, and the goal is to keep you on the right side of the market for as much time as possible. This does not work 100% of the time. Nothing does, but you will find out that by the time we get from here on the left side to the right side, we're going to look at all these starred points, and you're going to see that you will be in more than you're in on the right side more than you're on the wrong side. There's a couple of places where obviously you have these shorter moves like this and this one, or these fast ones like this, that things do not always work out exactly the same. But as you get to know the market a little bit more, you will very likely, not be looking to pull out at a place like this. But that's again with more knowledge. Um, if you don't have that knowledge and you simply try to do what we're about to do here, it should, for the most part, always keep you on the right side of the market for these long-term trends. All right, so what we're going to do is we're going to go through these first three here just a little slower so you get the idea of it. Then we're going to move very, very quickly through all the rest of these because it is a repetitive task. And so let's zoom in on this first one over here. So again, this is a weekly chart. You can see this W right here. 1W is 1 week. That means each one of these candles is represents 1 week. So 5 days of trading, all encompassed in a candle. I put on some markings. Okay, so we've got those markings on here. So the market is always going up and down. You do not need to understand every little nuanced gyration in the market. Don't listen to the news. Don't listen to the Fed. Just look at the chart. End of story. So what you're going to do with these letters, this HL, higher low, HH, higher high, LH, lower high, LL, lower low. Four things to know. All you're describing is, has the market gone down and made a valley? Has the market gone up and made a peak? That's basically what's going on here. And you can see where I've got these. Market has come down and you can't see it at the moment, but the market was trending up. So this is a higher low from the previous one. As the market goes up, this higher high, notice it is higher than the previous bigger peak. This one, lower low, it's lower than the previous low. Higher high, it's higher than the previous high. And that's all this is. Higher high, now lower high, because this one is come down and it's lower than the previous high. Lower low, lower than the previous low. This is how the market works. Any stock chart, any forex chart, crypto, doesn't matter. It all does this. So what you want to do is you want to start looking for this change of character because obviously it has come up, it's gone sideways, it's gone down. The question is, how can you stay in here for as long as possible and then get out so for all this downside, you're not taking any losses? Well, you'll never ever pick the peak. Very few people ever do, but The question is, how close to that peak can you get and feel comfortable that you've made a good decision? Or in the case of when you're down at the bottom and you're going to get back in, how close to that valley can you get without making any tough decisions? You can always make another decision. If you're wrong, you just do the opposite. So we talked about price always going up and down, natural. We're going to make this a little visual. Here we go from the higher low to the higher high, to the higher low, to the higher high, to the higher low. Excuse me. Then we have this lower high, then a higher low, then another higher high, then a lower low, then a higher high, lower low, higher high, and it just keeps going like that forever and ever. So when you think about visually this line, you're really looking for these larger peaks and valleys. Little things like this don't affect what you're doing. Shouldn't be looking at it. You obviously won't always know where those are in a live market, but hindsight is how we train. So what we're going to do is I'm going to leave that line on here for this first one. Move this out of the way. And now what we're going to do is now that we know about higher highs and higher lows, and you're looking for this change in character, notice how we go from higher low, higher high, higher low, higher high. That's a consistent uptrend. But what happens here? You get another higher low, that's good. But then all of a sudden, you get a peak, but it's a lower high. Oh, and you do get another higher low. That's good, but that isn't. Another higher high. Well, did it come back to being bullish or didn't it? Well, you can see in hindsight, obviously we went to a lower low and then a lower high and we continued down. You need some sort of a trigger to make you to tell you when to start looking. So you're going to take a simple trend line. We're going to draw it from the valley to another valley. And I would draw it to there, but I needed to go out into the future. So I'm going to just manually go out into the future like this. And I'm going to make sure that that trend line is just touching this point right here. So now this trend line will always be into the future. And what you're waiting for is you're waiting for that price action to break that trend line. And you can see as it changes character here from an uptrend to sideways to a downtrend, you are breaking that line several times. So the question is, what happens here? Oh, we broke the line, but we didn't have a visible lower low there. So in the next week, it was back up above. Here we broke, next week back up above. Here we broke. It took 2 weeks to get back up above, but it made it back up above, never making that that lower low. That's the key. So now here we've broke the trend line, we've come down, we've created a lower low. That means we've come past this previous point. So that is your first clue to say, hey, something is definitely changed here. We've gone from this series of higher highs and suddenly we've got a lower low in place. Now you see this pull back, right? And as it's pulling back, you don't know how far it's going to go because it could keep going right up to the moon. Nobody knows. But this one didn't. The next week, it pulled back down aggressively. That's your clue. You make your first lower low, then you make another higher high, and it pulls down. You got to go, hey, I know I broke my trend line. I made a lower low and a lower high. Time to get out. So you would probably get out sometime in this week or within this week here. It doesn't matter, even if it's 2 or 3 weeks, right? In this type of trading long term, your goal is to get as close to the peak as possible. So now, what did that save you, if anything? Let's zoom out a little bit. So here, you got out right in this area here, right? And look where the price went all the way down there. Okay, great. That saved you that one time. What happens the next time? So now you're going down. You want to know where the bottom is. So I'm going to draw that trend line, and I would draw it from there to there. Highest peak to highest peak. But I need to go out into the future. So I go out into the future like that, and I maintain touching this line. Price action's going up and down, up and down. We wait till it's crossing that trend line. But what's happened in the meantime? You've hit this lower low, then up a little bit, then another lower low, excuse me, and up, then down, but you didn't go down here again, right? So you've made a higher low versus a lower low. Now you've crossed the trend line. It bobbles back and forth sideways a little bit, but you see that it does ultimately pull back and go again. that pullback on the opposite side of the trend line and the go after a higher high, which is right here. You get your higher high and the pullback and a go. That's your clue. Time to get in. So in this case, you got out right about here at 1420 and you're getting back in at about 987. So you've saved yourself 500 points of downside. That means if you jump back in, that's all to your benefit. All right, let's go to the next one. So as all this time is progressing, we're going up, little pullbacks. Again, you're always going to have to be encountering these and making decisions what to do. We're going to just show you big picture stuff here, and you'll get to know that a little bit better. So as you make these peaks or valleys, you're going to draw a trend line on here. That trend line, it came down through here, bounced through very quickly, bounced up again. You never really got, this was your first lower low and it's retracing, but it retraced back above that line. So you probably need to always be thinking, hey, do I need to adjust this trend line? You don't have to, right? And you'll see two scenarios because here's one scenario where it breaks through that trend line, it bounces back, and then continues. So it could be that if you didn't move this trend line, you could have got out about here and gone down from there. On the other hand, a safer way to do this would have been to move your trend line to there because you had this large, well, not a large, but a pullback that was a little larger than the previous one. And then you have another pullback and you break through the trend line. It's a little more conservative. So now you pull back, you see it tries to go up above the trend line and then it breaks down right there. That's your decision point going, hey, I've had my lower low, pulled back, and I'm again going down. So over the course of this week or even that week, you would be going, I got to make my decision. You don't have to make decisions quickly. You've got a whole week, 2 weeks, sometimes more, right? So now let's go see what happened. This was the credit crunch, credit crisis, 2008. So you would have been out very close to the top right there. If you were really on top of it and taking some more, not less conservative, but a little more risky, you'd have got out there, but it could have continued higher. But here you took the conservative route, you're out right there. Now you whoop, market drops all here, you saved all of that. Question is, how do you get back in down here as it's dropping like this? Nobody wants to get behind it. That's called trying to catch a falling knife. You never have to do that. Let's draw this trend line in here. So we've come down here, falling, falling. All of a sudden it starts to bounce back up, goes through that trend line, pulls back, got a strong pull away from the trend line, and that's after a higher low, right? So now you've created this and you pulled back and you're going, this is your entry. So you would have got out roughly 1460 and back in roughly 944. There's another 500 points down that you saved. That's always the goal. So now you're going to move forward. We're going up. And so now these smaller pullbacks, sometimes, if you're on it, and you're watching too closely, you may have too many whipsaws that you do this on. But you'll get to know the market and what could be a larger pullback, what could be a smaller pullback. But it's always about these higher highs and lower lows and changing character that you really want to watch closely. And because those are the big ones. But you're going to get those like here. You've gone sideways here. It pulls back, comes up. Suddenly you have a lower high right after that. So the question is, what's happened here? Well, maybe throw a quick trend line on there. And again, you're doing this once a week, so it doesn't take long. Throw that right in there. Oops. Okay, so we touched that. Here we broke the trend line. We pulled back. So as soon as that starts going sideways, you see you've got probably a couple opportunities where you could get out right there. Um, there may be a couple other reasons once you get to know price action a little bit better why you might not get out here, but just assume you did. Let's do that. And we're going to draw our trend line right there. Oop, didn't work. Trend line right there. Price action comes down. It's going to go back up. It crosses that trend line. It pulls back. So you probably would have had a scratch trade. You would have got out right in this area, would have got right back in about the same area. Even if you lost a little opportunity cost, not a big deal, right? This is part of trading. Sometimes you'll make a good call, sometimes you make a call that's too quick. You have to be aware these things happen, but just keep sticking to this basic thing and you will be on the right side of the market much more than you're on the wrong side. All right, next one. Here we go. These next two, again, two more tough ones, right? So we're going to draw here. We've got the trend line going like that. It breaks the trend line, comes down. It actually does pull back there. It pulls back there, and it pulls back there. So any one of these with these pullbacks could have been your clue to get out, right? Or, if you're watching the larger trend, maybe you don't get out here, but let's say you do. Let's pull this after this next high right there. You're going to pull that down, follow the week, and immediately you pull back into here. Now you don't actually get any sort of a pullback until right here. So that would be down a week and then you pull away. So you may have gotten out anywhere in here and right back in somewhere in here. And again, that could have been another scratch trade, or it might have saved you and you might have made a little bit, might have lost a little bit. But again, smaller issue. Here's the next one. All right, this is the COVID crash. So it happened very, very quickly. It dropped right out of here very quickly, very fast. But what did it do the next week? It pulled back up to here and went down to here in 1 week. That's a pullback. And then it dropped out of there. So in this case, this is definitely a scary event. You don't know if it's going to last 1 week, 2 week, 10 weeks, but you can see it lasted 2 more weeks. Then everybody was panicking big time. In the end, it didn't turn out to be that big of a pullback, but you could have possibly been out there. You may have missed it altogether and rode it all the way down. Don't know the answer. Only you will find out when you trade. But let's say you're out. So right here, we're going to trend line. So there's your trend line. You're down. All of a sudden, 1 week, you're back up above it. It goes up, it pulls back, and then right here, it goes up above. Here's your strong push. So you would have been back in here or here, one of the two. So if you got out there, you got back in here, again, you probably saved a little bit, maybe a scratch trade, but had this continued down, you'd have been out as close to the top as you possibly could without knowing anything. No news, no Fed, no speculation, no talking heads on MSNBC, none of that. Okay, so let's continue forward. There we go. So now you're in right about here and you're coming up. You're moving your trend lines, So let's see here. You draw your trend line to here, it comes up, breaks through the trend line pretty aggressively. You see that? So now you're waiting for the pullback. There's your pullback, there's a pull down. So you could have gotten out right about there. Even if you missed that and you got, a few weeks and it pulled back up, you get another opportunity here because it's a second pullback with another lower high and it pulls away again. So possibly somewhere in this level, whether it was here or here, you would have gotten out. Right? All right. So next one. Here we go. We made this high. Come down trend line right there. It pops up above the trend line. It goes up. It pulls back. Aggressive pull away. So now you got to decide. Here's right about where you would have got in. Right. So you would have been out in this area and back in this area. Right. And you can see you got back in, but there was still a little pullback. Don't panic because it didn't cross your trend lines. Pull back here again. But look what happened. You did good here. Made a little trade. And we're back into another trend. We're going to draw this one like this, go in, break through the trend line, pull back, aggressive pull away. You would have been out somewhere in here and continued down. Again, this isn't a very far pullback. If you learn to read the market, if you know what this history tells you, you probably wouldn't have pulled out here. But assuming you did, You break through, you don't get any serious pullback until way up here. So it could be that you got out right here and you didn't get back in until here. So that would have been a little missed opportunity. However, had it dropped a lot, you'd have been safe. So there's that. And then there's also other ways to read charts when you learn more. This aggressive pullback and one or two candles in a row, you would have probably, with more experience, been jumping back in right in this area here. So now, now we're back to today. So the question is, what do we do? So we've got a trend line. We've got our trend line and our first trend line. As things are growing, we go head it from here to here. I'm going to go off into the future like that. Okay, what did it do? It came back, it broke through, and it pulled back, but it broke back up above. So what do I do? Do I leave this trend line here? Do I move it to there? The answer is it could be either, but to be conservative, you would move it to here. Okay, now it comes down. 1, 2, 3, 4 weeks later, it pulls back a little bit, but then it jumps right back up. So what I would do in this case is I would move this trend line to there. That way you're always keeping this close. And it's always a nice in steady climb. Now, all we're waiting for is what? You're waiting for this to break the trend line, do a pullback, and then as soon as you see that aggressive exit right here, it's time to go. So if it goes big, you're good. If it doesn't go big, if it goes small, you may have missed a little opportunity cost, take a small loss, but you'll be back in. So let's take a look back at the full chart. Marks. Okay, marks are gone. So now look at that. So from 1999 to today, you made 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 trades. Oh, actually 14 trades in 24 years. Not so bad. You've captured the vast majority of it. You can see where the trend lines are, where you got in and out. That is a simple methodology um, for trading in and out of a long-term investment with limited chart knowledge. Hope you enjoyed it. Have a good day. Talk to you there.